All right, cool. All right, let's get started. Share my screen. And I won't be able to see the chime all that well while I'm in presenter mode. So if there's anything, feel free to shout in and let me know. But can you all see the screen?
Yes. Not yet.
Cool. All right, perfect.
It's like it's
All
loading.
right, sweet. Let's get started. So again, this is like a real estate 101 session, how to get started. I want to give you a little bit of an overview of myself, my journey, and then we'll do some high level overview of investing, why I think investing is a good thing to do, and give you a few like step by step action items, and then also some resources. A lot of the go ahead.
It is loading for everybody. Nobody can see anything if you're presenting.
Okay. Let me turn off my video. Save some bandwidth here. Still loading.
It might be an issue with your chime because we weren't able to see your video before.
Maybe if people want to get off camera, and then we'll try to restart this here.
We've seen this issue before. I think the best thing is if you get off the call and join back in, that may resolve it.
Was on mute. Can you all see it?
Still loading.
I'm sharing my screen. I just logged back in and back out, so just curious, can anyone see it?
It's still loading.
Still loading.
I think you may have just dropped and not left the meeting altogether. So that's what we've seen. Like if you completely leave the meeting and join again, that resolves it.
All right, let me try it. Okay, you guys can hear me at least. But I'll try the screen share one more time. This has not happened before. I don't know why. Maybe it's been, a couple of weeks since since we've had our last meeting, but with none of the external guests this has happened. So let's take a look.
I had an update this morning from my chime. I wonder if that does anything.
That could be it. I don't think I have updated yet.
It's
It
loading.
is still running. Yeah. Maybe if he does it, you can share with someone, so someone can do the presentation, the sharing, and then can just click through as you discuss.
Yeah, that's actually a good idea. Let me drop that in. I'll drop it in the chime here. Okay, can someone possibly open it from there and share it?
Let me try. You want to see my screen?
I can see it.
Okay, then
Hopefully
I'll
the
go ahead
rest.
and start. Go in presentation mode.
All right, cool. Hey, thanks for that. That's yeah, some technical difficulties, but that happens. So glad we got it figured out. Yeah, let's get started. So feel free to go on the next slide. Okay, so let me start off a little bit by just telling you about kind of my journey into investing. So I'm not originally from the U.S. I moved to the U.S. in back in 2005 as an exchange student, and it kind of was at the very first time that I've actually lived in a house. I lived with a host family at the time, and I was just amazed because where I grew up, in the city and in Germany in general, it was very much not attainable usually to own property, and just the idea of ownership of property is not very common. It's quite common to rent there for a long time. Often, as far most of the people that I knew rented for the rest of their lives, honestly. So it started that initial like mindset shift, and which is kind of something that I want to always kind of pass forward to newer investors. So fast forward a little bit, really until I was about 25. Not sure how many of y'all are familiar with Dave Ramsey, is kind of the no debt king in the U.S. And I think that methodology applies to uh, a good population in the U.S. But if you think about real estate, really the power of real estate is leverage. And so you can do a lot with leverage if you leverage smart, right? You don't want to, like, bad leverage is buying a car that you can't afford, right? Buying things that you can't afford on your credit card and racking up that credit card debt. But if you buy real estate and you buy it right, it can be smart leverage that you can really use. But I was always the no debt person, and so I didn't really ever think about buying any property for a long time. So my first purchase was in Kent, Washington. I saw some of you had property there or are from there. And that was like my just first owner occupied property. My first investment property was in Buffalo, New York, which was out of state for me at the time, because I lived there but then moved to Washington. So I wanted to kind of invest where I thought it made sense financially. And I thought Washington was so expensive, so I'm going to go out of state first, where it was a lot more affordable at the time. Bought my second investment property not too far from there in Niagara Falls in 2019. And one thing that I did a different session about this over a year ago now, but I wish someone would have told me about house hacking, and we can again do a whole hour on this. But if I could do things over again, I would house hack. House hack is really where you go purchase a property, owner occupy it, and you rent part of your property out. And as we'll talk about, I didn't know at the time that that was an option, that you can have low down payment to get into a home. I thought you always need 20, 25% down, and we'll talk a little bit more about that, but you really don't. And so it's really getting that education, that understanding of how can you buy property? Like, how are all these people buying properties in expensive markets? House hacking is one of those options. So you can go to the next slide. So as I said, I started with out of state, just because I thought it was cheaper to go out of state, and I thought that was the right thing to do. But once I realized that there were other options, and I heard about the term house hacking, where I'm like, oh, I can actually go live in a property with not that much money down, I started to look into it. And back in 2020, I had my first kind of experience where I actually had a property under contract here in Seattle, excuse me, for about 430K. And that deal fell through. And the reason this deal fell through was there were financing issues from another property that I had, where I thought everything was on auto pay, all the mortgages were paid, everything was running smoothly. But the mortgage company contacted me about 2 months in and was like, "Hey, this hasn't been paid." So I gave them all my information, bank account information, making sure everything was set. Turns out there was one wrong routing digit, and it ended up giving me a 90-day late, which disqualifies you from getting any owner-occupied loan for the next 12 months. So this is like kind of the first tip if you want to start investing. It sounds simple, but make sure your credit. Check your credit report regularly. Make sure all your bills are paid on time. Make sure you're financially sound, right? Really, really important if you want to invest in real estate. A lot of people, don't go through conventional, don't go through banks, but I think most people do. And so really make sure that your credit and everything is in good shape. And if it isn't, start kind of working on that first. So I bring this up because you will hit bumps in the road as you start investing. No matter what, like, things will happen, things won't always work out. And that's why I like to use this example. So today, this property, if I had it, would have been worth about 650K. So right there over, a 3-year period, that's, a $200,000 change in net worth. And it's just the Seattle market has appreciated a lot. So that's why you see numbers like that. But eventually I, kind of picked myself back up, and I got my very first house hack property, so to speak, my third investment property, only a couple of years ago, back in Tequila, Washington, for any of y'all that are familiar. It's a suburb south of Seattle. And I started to understand this is really working. Both the out of state for me and the in-state was working. So I had a lot of friends coming up, "Hey, how do you do it? Can you tell us more about it?" So I actually got my license back in May 2021. Joined a team here locally. It's called the House Hack Team of Seattle, where we really help to people like new investors, especially also seasoned investors, to get into the game of real estate. Purchased my second house hack in September last year in Ballard, Washington. And I put it on here on paper because I believe in goals and writing them down. And I'm going to have my third property, the third house hack, by August of this year. So you can go to the next. So the last one, so I had the out-of-state journey, I have the house hacking journey, and the last kind of piece of my journey is helping others as an agent. So right now I own a total of 5 properties, 19 doors or 19 units across Washington, New York, and Germany, where I was born. I've helped pretty much clients and friends purchase about 4 million worth of real estate, and I put it and change their life trajectory. So I really believe that. That's why I'm passionate about this. A quick example, I work for the music team here at Amazon, so I have a lot of kind of musician friends, which really don't. Most of my friends in that industry don't care about real estate. Very creative. Don't really want to talk finance or real estate. So these were two of my friends that kind of fell in that category. But I was able to help them buy a property, and we had dinner a couple of months ago, and they talked about how that really changed their lives. So their the husband wasn't fully able to do music before they bought that property, but since buying the property, since renting part of it out, since using Airbnb as a strategy, he's able to focus 2/3 of his time fully on music and kind of cut back on his um, on his regular day-to-day job. So he was self-employed and really changing the trajectory of where they're going. And as you buy property, it changes the trajectory of where your family is going as well, which is something that I really really love and that I'm passionate about. The team I'm on here owns 25 properties, has brokered about 35 million in real estate across 55 transactions, so there's a lot of experience on that team. And you can go to the next. So why should you invest in real estate? So a couple of things. First, real estate is tangible and versatile, right? What I really love is you can directly influence what you're going to do with it. You can, fix up a property, add value, right? You can spend time painting, putting in a new kitchen, putting in a new bathroom, putting in flooring. You have control over that asset of what you do with it. You can also say, hey, I live in I'm going to buy a 4-bedroom, maybe one for me and my wife, and we have 3 extra bedrooms. What are we going to do with them, right? And you can rent them out. It gives you flexibility, it gives you options. Not so much if you're renting, right? If you're renting a 1-bedroom, 2-bedroom apartment, options are a lot more limited. Historically, stability and long-term appreciation. Of course, the real estate market goes up and down, and a lot of people, they always say, oh, what happened in 2009 and 10 and 11 and the the crash, is this going to happen again? Historically, real estate has been one of the most stable assets there are. And it's just like with everything, if you hang on to it long enough, if you have a long-term view, right, just like in Amazon, the long-term vision, things will appreciate and the value of your real estate will go up. In some markets, a lot less, and other markets a lot more. So Seattle, historic, like in the last 10 years, we've had between 10 to 15% year-over-year appreciation recently. So that's been really, really high. We probably won't see that over the next few years, but nevertheless, it is an appreciating asset. Diversification benefits, hedge against inflation. So right now, inflation, of course, is a big problem, and I think real estate is one of your best, if not the best, asset class to be in to hedge against that. As inflation goes up, generally real estate prices go up as well. Okay, next one. So continuing on that, what are like 4 of the wealth pillars of real estate? So these are the 4 main ones, right? So number 1, cash flow. If you buy a property right, you will ideally cash flow, meaning that after your mortgage, your taxes, your insurance, and all of your expenses are paid, the rental income will be more than all of those expenses. So that could be $50, $100, $200 a month. That's what's cash flow, like real cash flow is meant. So buying a property that pays you. Tax advantages. So one of the big benefits of real estate, and you see this over and over again with a lot of wealthy people, they're taking advantage of all the tax advantages that real estate offers. So the 2 biggest ones are mortgage interest deductions and depreciation. The 3rd piece is equity buildup. So if you buy real estate and you have tenants, right, those tenants are paying part or maybe your entire mortgage. So your loan is getting paid down year over year. You're building equity, but you're not paying for it. And last one, property appreciation. So as we just mentioned, real estate over the long term goes up in value. So it's an appreciating asset that will become more valuable over time. Next one. What are different strategies for real estate? So the most common one is probably the buy and hold, which you also will be referred to as LTR, long-term rental. That's when you buy a property, put in long-term tenants, so generally on a 6 or 12 months lease, and they pay you rent. Another one is MTR, which is midterm rental. So that's become very, very popular recently. Those are travel professionals. A lot of times, if you have a property near a hospital, for example, there's a lot of traveling nurses that don't necessarily need a property for 12 months, right? They might just be in town for an assignment for 6 months. Could be the same with a CEO of a major organization, or a professor that's in town and working, doing some research at the local school. So midterm rentals are very, very popular as well. And the last one, short-term rentals. So I'm sure everyone has heard of Airbnb. So that's another one that's, of course, the pandemic impacted it heavily, but now we're seeing really Airbnb has bounced back quite a bit. And it's a very popular strategy for real estate. Next one is fix and flip. So these ones are really active. Don't necessarily like suggested for your very first property, but certainly you can do it. That's when you purchase a distressed property, renovate it, and hopefully sell it for a profit. And the last one is wholesale, which is really wholesaling is kind of you're the middleman between a seller and an end buyer. So you contract properties at a discount, and then you assign that contract to another buyer, and you get what's called an assignment fee, which is the spread between what you bought it for and then what the end buyer is going to buy it for. The different types of real estate investment. We have residential properties, right? Those are usually your single family homes, apartments, your condos. You have commercial buildings. So could be your mom and pop shop, but it could be your McDonald's and your Starbucks, industrial warehouses, retail spaces, malls, things like that. You have mixed use buildings. So those are a combination between residential and commercial. They're actually quite popular here too in Seattle, where density is a big deal. And so you'll find a lot of properties where you can kind of live on the top, and you can legally have a business in the bottom of the unit. Real estate investment trusts, so excuse me, REITs, sorry. Those are like your Fundrise, your crowdfunding platforms. Very, very passive. You invest money, you get a return on it. And then land development as well, right? So you can buy a piece of land and you can develop it. You have somebody else develop it. You can put tiny homes on it, all kinds of options. So the reason I'm putting this out there is there's many, many different ways in real estate, many different types of properties and many different ways to be successful. Next one. As with everything, real estate does have risks, right? So it's not I love it. I love it as an investment vehicle, but every investment comes with its own risks. So as far as real estate is concerned, market volatility and economic downturns, right? Right now, we are kind of in this stage of the economy where people are saying we are in a recession, we're heading into recession. People are getting laid off, inflation is up, so it's kind of a bit of an uncertain environment, right? And that will affect real estate. Again, it's very like market specific. So some markets will be hit harder, others will be hit a little bit less. Property management challenges, unexpected expenses. So of course, as you manage properties, excuse me, expenses will come up, like your roof will leak, the water heater will go out, maybe the dishwasher stops working, right? Different expenses will come up. Vacancy and tenant related issues. No matter what, when you start renting out your home or your investment properties, you will eventually run into some kind of issues with tenants. But there are ways to mitigate them. But vacancy, of course, is a big one, right? If you can't rent, if you buy a property but you can't rent it for 3-4 months, you're losing money every single month. Interest rate fluctuations and financing risk. So, of course, right now, a lot of people are worried, right? Because they're saying, hey, the interest rate's going up so high. The problem is they're comparing it to where the interest rate was a few years ago, which was about as low as you'll ever get it. And I don't think you'll actually see it that low again, right? But people were so used to getting a loan at like 3%, 3.5%. And now it's at 7%, or close to 7%, and kind of fluctuating between the 6.5 and 7, maybe even going above 7. So people are saying, hey, this is super, super high. When a couple of decades ago it was in the double digits all the time, right? So it's always, you have to have a little bit of historical perspective, but definitely a concern to be aware of. And then a few mitigation strategies for that, right? So always researching a market. We'll talk a little bit more about that. Maintaining cash reserves, diversifying. I love real estate for sure, but definitely diversification, investing in different asset classes, could be within real estate or like stocks, bonds, other things. Your business is always a good idea. And establishing contingency plans. All right. So where would I start out today? First off, it honestly, when I work with a lot of new investors, the biggest thing to me is kind of understanding your why. And so I have this acronym here. I was recently at a conference with it's Brandon Turner's Mastermind and a bunch of real estate investors, and they use this acronym SCALE. So set a vision, right? Set a vision, kind of where you want to be in your life and in real estate, and understanding your why. So what I mean by that is, I honestly believe you don't have to have like hundreds of properties or hundreds of doors. Think about what's best for you, right? Everybody's different. You might be just starting out in your career on your own, single, just trying to, just kind of trying to start in your job. Or you might be 10, 15 years down the road, married with kids, dual income. It's going to change, right? Like what your priorities are. So really thinking about what's most important to you. The next one is like having a crystal clear criteria. So to follow up on that is pick kind of one lane, right? Especially when you're starting out. When I went to this conference recently, like I hear syndicators and I hear people that are investing in mobile home parks and commercial and land development and multifamily. And you can get so diverted by all these different options. You can be successful in any of those, right? But it's just really important to pick one that works for yourself, that you want to learn more about, that you're excited about. So for me, it's kind of the single family, like I said, the house hacking, teaching people how to get initially started in it, and then kind of the small multifamily. But I haven't done any commercial, mobile home parks, land development, but I know people that are super, super successful in it, but you can be successful in anything. So you just kind of pick a lane, something you're interested in, and start learning about that. Location is really important, right? Do you want to start in state or out of state? I started out of state and then went in state. If I were to do it again, I would have started in state right away. But maybe you're in an area where the numbers just, no matter what, they just don't make sense. So you're going to have to go start looking out of state. What kind of properties are you interested in? Are A class, which are really your high end, super, super like very high income, wealthy neighborhoods. B class is kind of like your middle class to upper class. C class, your middle class, and then D class are kind of really rough neighborhoods where the properties might be really, really cheap, but it's going to be really difficult potentially to manage. So you're going to want to understand which neighborhoods you want to invest in. Condition of properties, right? Do you want to invest in new construction, completely fix up a property, just cosmetic updates, or something in between? And profitability. So are you looking for cash flow? Are you looking for appreciation? Are you looking for a blended model? accountability is huge. So start tracking like the properties that you analyze, calls that you make, offers that you send. I'm part of like a accountability group where we talk about this all the time. It's not just real estate focused, but it's heavily real estate focused. And so find people that are passionate about it. Like in this group, right? We have 70 people on here. We have 1,500 people in the group. Let everyone know. So that's a big one. Once you want to start investing, let everyone know. Your friends, family, wholesalers, agents. Let them all know, because once you set that vision out there and you put it out there, it will eventually come back to you. Like that third property I bought, that's been the best one so far. Like I got that one off market because I just told people, hey, I'm looking for this. I'm looking for this exact property. Execute daily, right? So like analyze and look at properties, and we'll talk about that more in a second. All right, so what are the exact steps? If you don't, you haven't ever heard about real estate, or you really don't know where to start, here's kind of where I would start. So number one really is, talked a little bit about it, but it's your financial situation, right? It's going to make a big difference if you make 40,000 a year or 400,000 a year, right? It's going to put you in a different a category in terms of what you can buy potentially if it's just you, right? There's other options. We might not get into it fully, but partnerships, for example, are a big deal. So I would just never, for anyone that's read Rich Dad Poor Dad, that's probably the number one real estate related book that people mention. But there's always this saying of asking yourself, how can I afford it? So a lot of people will say, oh, I can't afford that, but thinking about how can I afford it? And so this is where your mind again starts thinking about, oh, maybe I don't really have the money, but I found a really good deal, and I have a friend that has the money. Maybe I can partner with them, right? But think about your financial situation. But for most people, when you start, find a lender, find a mortgage broker. Amazon has some that we directly work with, and you get some. I know there's some closing cost credits that you get for some of them, but that's kind of where you want to start. And quickly, I want to touch on pre-qualification versus pre-approval. So when you call a lender, you can get a pre-qualification, which really they take some information about what's your income, what are your assets, and they'll give you a rough idea of how much house you can afford. It's not there's no credit pull involved, but when you get an actual application and do what's called a pre-approval, that's when you actually have a hard credit pull in order to really get a set number of what you can afford. So they might come back and say, hey, you're pre-approved with a $700,000 loan, right? So when you start looking for homes, that's kind of your ceiling, that's your max. A big call that I want to make here is your down payment options. So a lot of friends, family, and coworkers that I talk about, they're like, hey, I don't have 20% down in a expensive market in like Seattle, where the average price of a home can be $700,000, $800,000. 20% of 800,000 is $160,000. Not many people that have that money just kind of laying around, right? But if you use an owner occupied loan, you can actually put a lot less down in order to get into a home. Now, if you're just purely doing an investment, it is generally 20% to 25%. So that's when I was kind of saying you might have to look out of state and into a less expensive market. But if you're using owner occupied financing, and especially if you're a veteran, for example, 0% down. USDA is the United States Department of Agriculture. So if you live in a rural area, it can be as low as 0% down. Federal Housing Association. So for first-time home buyers, or if your credit score isn't really good, you can go as low as 3.5%, or 5% just conventional. So ideally, if you can qualify for conventional, you can put 10% down, you can put 12% down, whatever you really want to do. But I just want to bring that point home that you don't need 20% down in order to get into real estate. What's step two? Step 2 is really starting to build your team. That usually starts with finding an agent. And my advice here would be find an investor-friendly agent. Super, super important. When I started investing or I started looking for real estate, I would interview some agents and I would ask, hey, how would you analyze this property? What's the cash on cash return on it? Right? What's the rental demand? And they didn't know. A lot of people didn't know. Like a lot of agents, in my experience, and this is quite amazing to me, don't own property. But if you're looking at it from the investor lens, ideally you find an investor-friendly agent. So some people that have worked with myself and friends that I have, they've interviewed like 10 different people, and then they started talking to me and they're like, oh, you understand it. But the 10 that I talked to prior, they didn't understand it. So it's really, really important, whatever market you're in, interview them and find investor-friendly ones. Ask how many properties they own, if they want to analyze the deal, market conditions, things like that. And your team will also include property managers, contractors, other investors, right? Talk to investors in your community and get recommendations from them. All right, so now you've kind of started building your team. What do you do next? So the next piece here is really to start analyzing properties. And this is something you can do even before you have anybody, right? You just kind of need to know how, and we'll talk a little bit about it. We might not be able to do a full analysis, but I'll show you a spreadsheet that I use. So start looking at the properties, right? Reviewing the financials, evaluating rental income potential. Practice makes perfect. Analyze as many properties as you can. I dropped a couple links in here. So one is the spreadsheet that I use. I'm happy to share. The other one is the Bigger Pockets calculator. Is a really, really good one. That's what I started out with. And at the end of the deck, I'll have the link to Bigger Pockets for anyone that's not familiar with it. I'm actually kind of curious if you can drop in the chat. If you've never heard of Bigger Pockets, this will become your number one resource, I would say. Next one for rental demand, or if you're just going to go one more quick back, Rentometer. So a really good resource to use, Rentometer, is it will show you what are average rents, median rents in that particular neighborhood. And that's how you can figure out, okay, what could a property potentially rent for? Okay. All right, so I wanted to show just a spreadsheet here when I analyze properties. So this is kind of what I use. And again, there's many different ones. There's many different ones out there, but find one that you like. I gave two options, but there's a ton of them if you just go rental analysis and you punch that into Google. But this is kind of how it breaks down generally, right? So we'll go over this like really quick, but this is one of the properties that I own that I do a room rental with. So you put in your list price and your purchase price. So in that case, purchased for $705. Rehab budget, if it's needed at all, about $30K. You can see on the right there the loan options. So on that one, I put down 5%. The interest rate, of course, it was a lot lower than it is today. Was just under 3.5%. When you look a little bit to the right there, it'll calculate basically what's your total cash invested, what would be your monthly mortgage, and then you have the cost assumptions all the way to the right. So a really, really big piece that people miss is when you analyze a property, it's not just about what's my mortgage, what's my insurance, what's my property taxes, right? If it was just that, and then you compare that with your rental income, you're missing a big bucket of potential expenses. And the major ones are vacancy, right? Your rental isn't always going to be occupied. So you have to factor that in when you do analysis. Maintenance and repairs. Again, like we were saying, the dishwasher is going to break. When I had my first property, I remember like right away the garbage disposal clogged up, right? All of a sudden the washing machine wasn't working anymore. So you want to factor that in as a percentage of your analysis so that you're not all of a sudden like, hey, I'm I'm paying thousands of dollars and I didn't factor that in, right? CapEx. So CapEx is your big expenses, your major capital expenditure. So that could be your roof, your hot water tank. It could be windows, foundational issues, things like that. So you want to factor that in. And then any other costs. If you're buying a condo, factor in the HOA fees. On the bottom, then, you're going to have your rental income. So I showed you the site rentometer that you can use to get a sense of what your units could rent for. This particular one was a room rental, so I figured out what I can roughly rent out the different rooms for. You put that in, and it will then analyze and calculate for you the cash flow, the cash on cash return, the cap rate, and the gross rent multiplier. Really, the one to focus on is kind of the cash on cash return. Gives you more of an apples to apples comparison. If you were going to take that money, that same amount of money, and let's say invest it in the stock market or put it in a bond or put it in your savings account, what would be the return, right? So in this case, we had the total cash invested 70,000. The calculation here is that it's 14% return on that 70,000, right? Stock market historically averages 8%. So I could say, okay, I feel more confident in just on that cash on cash that this is a better investment. But if you think a little bit back a few slides, don't focus just on that number. There's other benefits to real estate, right? Like the tax write-off, appreciation, equity buildup we talked about. So you can go to the next one. So this is one really quick here that we had for my friends that recently purchased a property here. What they're doing is they have basically an Airbnb on the bottom. That one averages about $2,500 a month for them. In the summer, it's sometimes as high as 4,000. In the winter, it can be as low as 1,000. So on average, that's what they were getting. And then they can rent out a room for about $1,300. And this is here in Seattle. Again, numbers may vary, but these are actual numbers. Like these are not made up numbers. And I want to show this one because these are real. Like these are just recent, right? This is literally what's happening right now. So they got their loan at 6.5%, right? They bought their property at 760,000. You can see that negative cash flow number there. You can see that negative cash on cash return. And so right now, a lot of people that I see, they're saying, hey, it's just with these high interest rates, it's just impossible. So you could look at this really quick and say, this is a terrible deal, right? You could say this isn't worth pursuing. The piece that this one is missing is that their property was actually appraised for 910,000. So they got it for 760, it appraised for 910, right? So even though they're negative cash flowing on here, they just had $150,000 in equity because they bought it. They bought a good deal, like they bought it under market value. So I'm putting this on here to let you guys think a little bit about. It's not all about just cash flow. You'll hear cash flow all the time. But in this market with the higher interest rates, it is very difficult to find cash flowing properties. But it's not the only thing to focus on. Now, do I say just buy negative cash flowing properties? No. If you can find one that cash flows, great. But don't make it your very singular focus. Next one. Step 4. So you've been analyzing properties. You've been, understanding what's the cash flow, what's the cash on cash return, what are my rental rates, and so on. So then you negotiate, right? You will have your inspection. You start thinking about property management systems. So one that I use locally is called Avail. Avail is really, really good if you want to self-manage your properties. But you can also hire professionals to do it. If you're like, hey, I just don't want to get that call. I always say that the standard one is the clogged toilet at 3 a.m. You can have someone manage that for you. You'll pay them a fee for that, right? And a lot of people, especially when they're starting out, they don't really want to do it. But again, think about your own situation. Think about, do you have the time? Do you want to spend the time, right? Maybe you don't. Maybe you do though, right? So there's different options, and Avail is a great one for self-managing, but you can totally hire a professional. And so a couple of pictures here of recent closings that we had. The ones on the left were actually the ones I mentioned in the beginning, the two musicians here that were just super excited and worked out really well for them. All right, step 5. So you have your property, you've analyzed it, you've closed on the deal, you've got it rented out. Make sure you regularly review your investment, right? Don't just let it sit there. Look at it, make sure to make adjustments, explore other options. Like I recently sold my very first investment property because I had people leave. It needed about $40,000 in renovations. And for my situation and what I could get out of it, it wasn't worth it. So I just, I sold it off market to um, a fix and flipper who bought it cash, and he's willing to fix it up and rent it out. That's fits his situation. For me, that property was no longer worth the time and the cost it takes. So always review your investments. Are they cash flowing? Do they need improvements? Can you maximize, right? Maybe you can do a little, like make a little bit better listing on Airbnb. Maybe you can add like a little touch on it that will allow you to charge a little bit more, right? Think about different ways you can increase the value. Right now I'm working on a subdivision. So one of my properties has a big lot. So can you subdivide? Can you build an ADU, which is an accessory dwelling unit in the back, to add value? Next one, please. And then step 6, honestly, continue networking with this group, with others in the group, with your local groups. Enjoy your life. I think it's some people get super involved in it. There's so much. Real estate should be a vehicle for you to get more time. Eventually, in the beginning, it's very time intensive, but eventually the idea is so you have more time to enjoy your life, and then give back. So like one thing that I do is whenever I sell a kind of a property here or help people buy one, I try to donate part of it to an organization locally. So recently we did the Linguistic Justice League, and I think that's the coolest thing, right? Like if you do well in this area, you can give back. Give back to the community that you're in locally. I have friends here who've been investing for a long time. They donate tens of thousands of dollars, and it's amazing. So really, as you become more successful, I'd encourage you to give back to the community. And it doesn't have to be monetary donations, right? It's just like this group and us running this group together and networking is also just giving back and helping people educate and learn. And lastly, I put on some resources here. So again, I mentioned it, Bigger Pockets. Definitely go on here. This has everything you need. You can find agents, you can find lenders, you can find anything. Real estate at Amazon. So we're going to put this one up on broadcast. We have tons of videos on broadcast. So much information out there. Information isn't really the problem. The problem is, putting it all together and then taking action, right? I put 3 of my kind of favorite books. So the first 2 are 2 of my favorites. The last one I actually haven't fully read, but every investor that I go to, they mention this. I've met the author a couple of times as well, and really good books. So if you want to kind of start learning, start reading, these are 3 good ones. There's a ton of them out there. Wari, so I'm in Seattle, Washington, locally. For anyone that is locally here, I'm happy to connect you with people, with resources. So this is a Washington State real estate investing Facebook group, has over 10,000 members. But find your local one. Just go on Facebook, punch in real estate, Milwaukee, wherever it is, and you'll find a bunch of groups pop up. There's usually always a RIA chapter, so Real Estate Investor Association. Locally here, it's the Puget Sound. But again, go to the local one for you, and you'll find tons of investors, tons of resources to help you out. And then local meetups. So one thing that my team does, the House Hack team here, is we do monthly happy hours. If you've never been, you're interested, I usually send them out to our local Seattle group. Feel free to always reach out to me as well on those. And yeah, these are just a few of them I think that can help you. So you can go to the last slide. Cool. So if you want to connect with me, of course, I'm here at Amazon, as I mentioned, also an agent on the House Hack Seattle team here locally. So I try to post some cool stuff on IG here and there. We've had other speakers on here, and especially in the real estate community, who Instagram can really open doors for you. Like you can connect with a bunch of amazing people. You can learn a bunch of good stuff. So feel free to connect with me any way you like. Of course, Slack, Chime, this group here, and I'm happy to talk real estate, help you out if you need any resources. And with that, we're almost at time since we had a little bit of a delay, but I would like to at least do a couple Q&A. So if we have a couple questions, I'm happy to take them. Go ahead, Maria.
Thank you for sharing your story. This is really inspiring. So I've been interested in, getting my broker license and starting out as a broker. But how would you recommend, balancing that with a full-time job at Amazon?
Yeah, it's a good question. I actually get that question a lot. So it's not easy. It's definitely not easy. The biggest thing that has worked for me is just really prioritizing your time, right? Understanding. So first of all, when you get your license, it took me about 3 months, and I was just recently talking with my friend about it. I mean, I would work here until let's say 6 p.m. and then from like 7 to 10, 7 to 11, I would start working on the license. So it's time blocking and really prioritizing and understanding that. For me, I love it because I really want to help people on it, and that's I'm really passionate about it. But if your goal is kind of that, there will be a lot of evenings, a lot of weekends that that you will work on it. Of course, outside of the W-2. But if it's just to like, hey, I want to have my license and so I can look at properties myself, then of course you'll have more flexibility. But I would say understanding it's a big time commitment, but it is possible if you properly like time block and prioritize. All right. I think next one was Alexander. If you were to start from scratch, there's 250,000, no houses, and what's trade would take? Give a high risk tolerance scenario versus low risk. Yeah, so I think if I was to start today with 250K, honestly, I would first off, I would do a 5% down house hack, or maybe with a higher interest rate, I would 10% house hack. That would be always like my very first strategy. Take part of that money, get into the property with your first property, or it could be a fourth property or whatever it is. You can take a low down payment and get into that house, because it'll be your least expensive way. It'll be your least down, right? Least amount of money down, and it will be your lowest interest rate. Then the money that I've left over, like I said, you could do this for 50K. So if you have 200K left over, I would probably say if your risk tolerance is high, I would start networking with wholesalers. I would start looking at off-market properties. I would start looking at some fixers, right? At that, if you have about 200K, I mean, you can use that as a 20% down on a lot of properties, right? So I would suggest going local in your market if that's possible. If not, if the numbers just don't make sense there, like I said, start networking out of state. For 200K, I mean, you can in you know in certain in the Midwest, in some areas down south, I mean, you could potentially buy, you know, let's say a 20% down of a $200,000 property, right? That's 40K. So if you have 200K, you could potentially buy 4 properties that way, or you can buy a small apartment complex. But that would be my suggestion. I mean, first do the house hacking. Next, look into like some value add opportunities if your risk tolerance is high. If your risk tolerance is low, you can use syndication, right? More passive. A lot of them you need to be an accredited investor, meaning that you need to have usually it's at least I think a net worth of 1 million, or you need to have $250,000 cash. So yeah, those are a couple options there. Cool. I can take one more if there's one more. Otherwise, okay, let's see here. You mentioned buying your third property off market. How does that process usually work? What are the pros and cons? Thank you so much. Yeah, good question. So generally off market just means it's not on the MLS, right? So MLS, multiple listing service, that's where your agent or agents have access to. Redfin, Zillow, they're all kind of run by the same, they're based on the same data source, but they're usually a little bit delayed and you don't get quite as much information. Like you can look for expired listings, things like that, that your agent can. So anything that's not on the MLS, for that process, there's multiple ways. One is like just talking to people, right? So it could be the local person at your gym, at your church, somewhere. If you tell people, hey, I'm looking for properties, they might say, oh, by the way, I actually just heard my neighbor is selling their property. Like my friend, this recently happened to them. One of the agents that he had worked with, they had a property that wasn't listed yet from family that they knew was going to get listed. But before it ever went on the market, she reached out to him and she said, hey, I got this off-market property for you. So agents will have them. So like myself here in Seattle, I know a bunch of wholesalers. My team has them. So we come across off-market properties all the time. Friends, family, you can do what they call driving for dollars, which is you drive around your neighborhood, you look at distressed properties, you literally knock on the door and you ask, you know, hey, are you interested in selling your property? So really the networking piece is the biggest part, I would say, to getting off-market properties. Oh, and really quick, what are the pros and cons? Difficult to say. It depends, right? So generally the pros on off-market is that they're supposed to be cheaper than on-market, right? You don't pay agent fees, you don't pay closing fees. So they're supposed to be less expensive, and you might be getting better deals. A lot of the off-market properties that people send you are not good deals, so you have to become good at analyzing them. So the cons, I would say, just be very, very careful with that, because you don't have the protection, especially if you don't work with an agent and you work directly, let's say, with a wholesaler. You're kind of limited in your protection, and if you don't understand how to analyze a deal property, you know, it can be a bad deal quickly. So I would be cautious with that. All right. So we're 5 minutes over. Like I said, feel free to reach out to me, especially if you're in the Seattle area, Washington area. Happy to chat. But otherwise, yeah, feel free to Slack, Chime, or connect with me on the socials. I will try to continue moving this group forward. If you're at all interested to help out, you can also reach out. But really, really appreciate anyone that spent their time here today. I hope this was valuable. I hope this was useful. And we will make sure to upload it on broadcast so that everyone else can see it. And with that, I think I'm gonna end the meeting and give you all one wave. So thanks again. Have a great weekend. Happy Friday, and I'll see you all.